Ladies and gentlemen, good day and welcome to the Gold Ltd Q4 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Patel from Orient Capital. Thank you, and over to you, sir.
Thank you, Darwin. On behalf of Orient Capital, I welcome you all to Gold Limited's Q4 and FY24 earnings phone call. From management side, we have Mr. Mangesh Chauhan, Managing Director and Chief Financial Officer, Mr. Darshan Chauhan, Full-Time Director, Mr. Mahendra Chauhan, Full-Time Director, Mr. Jayesh Sanghvi from the finance team, and Ms. Nikita Jain, Company Secretary. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and the company's website. A short disclaimer I would like to mention before we begin the call. This call may contain some of the forward-looking statements which are completely based upon a belief, opinion and expectations as of today. These statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, now I hand over the call to Mr. Mangesh Chauhan. Over to you, sir.
Thank you, Parth. Good evening, everybody. It's a great to have everyone here for our Q4 and FY24 earnings call. Let's dive into the detail and provide you with a comprehensive update on our business developments during the quarter. As we approach Gold's 20th anniversary, we would like to share our vision for the next 20 years and beyond. We plan on becoming India's leading jewelry manufacturer that serves customers in both India and the world. Let us spend a few minutes at the outset of our presentation to share with you some of the actions we have been taking to lay the foundation for our success. We understand that this journey will not be easy, but we are working hard to achieve this objective. This is a continuing process and we will keep you updated as new developments occur. We believe there is an opportunity to create a globally leading India-based design-led jewelry manufacturer. We make lots of beautiful designs that delight the customer and we manufacture this product efficiently, ensuring the best quality and cost. We plan to continue our partnership with leading Indian jewelry retailers that we have nurtured over the last 2 decades. India's large retail jewelry chains are expanding at breakneck speed, with estimates suggesting 500 new stores coming up from just 5 top chains in the next 3 to 5 years, which occurs well for our ambition of becoming top jewelry manufacturer. Understanding the current market dynamics of newer generation and conceptualizing the same with precision into products that live up to the expectation of our customers remain our topmost priority. We have achieved very high growth rates in large part because we understand our jewelry retail customers and customer. Our large number of designers can create designs that help our jewelry retailer quickly sell the products in their respective store. Jewelry that sells in the store in South India, say in Ernakulam in Kochi, will be very different than that sells in Karol Bagh in Delhi or Andheri West in Mumbai. Our jewelry chain retail customer value the speed at which our jewelry inventories turn over at their store. We not only benefit from the traditional karigari skill of our jewelry designers, many of whom are trained in Calcutta, but also use the latest computer-aided design technologies to ensure we make delightful jewelry that is lightweight. As corporate jewelers grow in India and the industry become more organized, there is a need for jewelry manufacturer suppliers to become equally efficient and organized. We believe Gold that has moved early to become organized, professionally managed, and as well as process and quality focused will be one of the winners. We plan to grow fast and become India's leading jewelry manufacturer. However, we are committed to growing in a profitable and capital efficient manner with high returns on capital. We have made and are continuing to make required investment in factory space, the latest manufacturing equipment, computer-aided design capability, regional and global salespeople, marketing, as well as finance. corporate governance, and process controls. We firmly believe that hard work we have put into building a strong foundation will enable us to become one of the leading global jewelry manufacturers. Let us walk through each of these topics. Many of you have visited our new factory in Navi Mumbai. If you have not, I encourage you to either view our videos that showcase our facility, to contact our investor relationship team to arrange a visit. Our existing factory alone with minimal investment in capital expenditure can let us grow more than 5,000 crore in revenues. In our factory, you will see a combination of the use of the latest computer-aided designs and manufacturing combined with the traditional skill of our craftsmanship and karigars. We have hired manufacturing experts to help us to optimize the production of gold jewelry, minimizing gold loss in our manufacturing process. We are implementing the latest supply chain management software. Sales and marketing are a very important focus. Increasing scale gives us the advantage of further reducing cost as our overhead is spread over a large base. We have hired sales and marketing experts who can not only help us sell the leading jewelry in India, but also reach out of the large jewelers globally. We are creating a B2B marketing campaign that targets the leading customer in the field. You will not see us advertising in the manner of retailers that target the end customers at locations which as airports or highway billboards. We focus on targeting large retailers as jewelry event in India and globally. The jewelry business is built on trust. Corporate governance is very important to us. We would be strengthening our board and team, as well as in the next few months, my focus will be on strengthening our governance standard. Our long-term aspiration can be achieved only if we have a strong foundation in governance. In line with our vision, we have acquired two entities, Star Mangalsutra Private Limited and Sparkling Chains Private Limited, are promoter-owned and private. Even though both these entities are into jewelry manufacturing, product portfolio is completely different from Sky Gold. These entities were kept separate since the design and manufacturing capabilities were different. However, considering our long current term strategy, we have acquired the private entities. The promoter do not own any private entities. Cumulatively, Sky Gold has issued 4,70,542 shares at an issue price of 11.97, having a face value of rupees 10. The approx value would be of INR 49 crore 98 lakhs. The average price per share was arrived through SEBI standards. Apart from the stock issue, there is a cash portion in the transaction as well. Darshan Chauhan and I have lent 37.5 crore of both entities to both entities. These are interest-free loans. The money would be paid back as well. However, the repayment will happen only based on Sky Gold's liquidity scenario. The cash payout for a loan will not happen in a hurry. Only based on Sky Gold growth prospect, cash payout will be made. To simplify the transaction further, the total acquisition cost is 87.5 crore, that is 49.98 crore of shares and 37.5 crore of repayable loans through cash and equity components. The acquired entities accumulatively generate 370 crore turnovers and PAT of 7.5 crore during 24. During 25, we expect the both entities to generate 600 to 650 crore of revenue and a PAT of 15 to 17 crore. This translates to an acquisition valuation of 7 PE on FY25 and 12x PE on the trailing basis. To summarize the Sky Gold aspiration to make in Bharat for the world, we are evaluating the strategic acquisition to become a global vendor. We would make announcement at the appropriate time. The reason for acquisition to have access customer and global design quantitatively. We are looking to achieve 6,000 crore revenue, 3 to 4% PAT, and margin 25% ROCE. Now I would like to hand over to Darshan Chauhan, who our whole-time director, for his remarks. Hand over to you, Darshan.
Darshan, sir, you are not audible.
Hello.
Yes.
Good evening to all of you. Coming to the export vertical, India's exports in plain jewelry has witnessed a significant jump over the last 1 year of 62% to $6.7 billion in FY24 as compared to $4.2 billion in FY23. These developments could be attributed to expertise in jewelry manufacturing, cheap labor cost, and incentives provided by the government. Capitalizing on these benefits, we are looking to open sales office outside India, and acquisitions we are targeting would be in this direction. Embracing our motto of Making Bharat for the world, we expect revenues from export business to increase quite significantly as a percentage of total revenues over the years from the current contribution of low double digits to 30% by FY27. Furthermore, the company has strategically decided to enter a diamond-studded jewelry segment driven by the high demand for such products, particularly in the lightweight category, where we are market leaders and possess significant expertise. This demand has observed from our current customers as well as across the market participants, encouraging us to venture in this margin accretive and growing segment. Increasing our export revenue share is of strategic importance to us. Our gross margins and return on capital would improve with a higher share of exports. Now I would like to hand over the call to Mr. Mahendra Chauhan, our whole-time director. Over to you, Mahendra.
Hello everyone. Good evening to all. To seize the multiple opportunities as mentioned by Mr. Mangesh and Mr. Darshan across different business verticals, I would also like to mention about the key hirings done by the company in the recent quarter to help the company achieve its strategic goals and facilitate future growth. These key hirings include HR head, production head, product development manager, sales general managers. Along with the strengthening of senior management, company is also actively evaluating candidates for chief financial officers. We are also creating an advisory board that will advise us on globally leading techniques in manufacturing, supply chain management, sales, marketing, and finance. We will update you on this addition as they occur. I head the manufacturing practice of our company. Looking ahead to financial year 25, our roadmap would be to increase capacity utilization at our new facility to 50% on an annualized basis, increase our investment in IT and automation. Our ERP system will become operational in the next few months. Implementing an ERP system is a complex task in a jewelry manufacturing company since the SKUs are 1,000. A strong ERP system will help us. Our ERP system will become operational in the next few months. Implementing an ERP system is a complex task in a jewelry manufacturing company since the SKUs are 1,000. A strong ERP system will help us to keep a strong check on multiple operational parameters, specifically inventory and receivable management, gold loss, and Karigar productivity will be closely monitored. We are also speaking to image processing companies to automate our quality check and security standards. We would be rolling out an app shortly to seamlessly interact with our customers. The thought process is to provide a B2C purchase experience to our B2B customers. This would be the first in the industry. My personal focus will be to digitize the entire manufacturing operation of Sky Gold. Now I would like to call Mr. Mangesh Chauhan to take you through our Q4 and financial year 24 financial performance. Mangesh Chauhan.
Thank you, Mahendra Chauhan. Now I will discuss the Q4 financial performance. The consolidated revenues for the quarter stood up to rupees 513.4 crores versus 269 crores in Q4 23, thus registering a growth of 90.2% on a year-on-year basis. The gross margin was at 7.2%. The quarterly volatility in gross margins is due to product mix change. Structurally, we would like to reach 7 to 8% gross margin through product mix and exports. EBITDA margin would be maintained at 5.5 over the long term. Reduction in net interest cost will be a big driver for our PAT margin expansion. Currently, the inventory is funded through a working capital loan at 9 to 10% rate. Over the next couple of quarters, we would be moving to 80-90% gold metal loan at 3%. With a gold metal loan, there would be no hedging cost as well. On the interest income side, we have collateral of INR 70 crore in the form of HDFC Bank's shares, etc. We would be liquidating the shares and converting the same to the fixed deposit. As a result, we would be receiving interest income. As a result of conversion from working capital loan to GML and liquidation of shares, our interest cost cost would more than drop by half or less than point of the sales. The above measures would help us to cross 3% PAT margins. On the balance sheet side, our inventory days increased due to the corporate orders, which were received close to the end of the quarter. On a normalized basis, our inventory days would remain lower than 35 days. Implementing ERP system would be great help. Over the next 2 years, we would like to lower the capital cycle to 45 days. Even the receivable days would reduce with more cash and carry business. With this, I would request to open the floor for the questions and answers. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Palash Kawale from Nuvama. Please go ahead.
Thank you, sir, for the opportunity, and congratulations on very good set of results and acquisition, very good acquisition.
Thank you so much. Thank you so much.
Yeah. So my first question is related to acquisition. So I would request you to spend some more time on product portfolio. How is it different from our own product portfolio? And
Sure,
how are
sure.
the margins there?
Sure. So, the Sky Gold, we are making casting jewelry product, which is the 40% consumption of a store. So, in Star Mangalsutra, it is a manufacturing company which is making Mangalsutra, which is a 15% requirement of the store. In sparkling chains, we make machine chains, which are made in the machines. Lesser karigara required, machineries are there, but 80% is made in machinery, and linking and all are done by the karigars. So chains is also a product which is consuming in the jewelry store. It has a consumption of 25% of the store sales. So right now with this acquisition, we are in all the 3 products which are really running in the stores. So casting we are doing in Sky Gold, Mangalsutra manufactures in the Star Mangalsutra, and chains which ladies and gents, both teenage and kids, all over chains are wear by all the age person also, teenage also, and mid-age also. So the chains are made in sparkling chains. So with this acquisition, we'll be there with all the 3 top running products in the store with every corporate and other clients. So this will help us to drive our revenues and profits. Coming back to the profits, last year it was at 1.75 PAT or 2% approximate PAT. So we can move by 2-3 quarters, we can move them also to 2.5 to 3% PAT by reducing the interest cost and applying the ERP systems and all. So they, both the company has the potential to travel with Sky and grow up to, they both have the capacity to make 200 kgs in the daytime, and in night shift we can make 300 kg per month. So product wise, I hope you understand that we are in a, these are in the chains, these are in the Mangalsutra, and we are in the casting jewelry, necklaces, pendants, earrings, all this we have in the Sky Gold.
Yeah. Sir, could you repeat the contribution from Mangalsutra and chains that you mentioned? Sorry, I missed the number.
Right. Last year we have done both had done a 370 crore. So this year we are expecting to do 600 to 700 crore, and next year we are expecting 1,000 crore from both the entities.
Okay.
Together.
Sir, you mentioned that Mangalsutra contributes around 16% to the retailer sales, right?
Yeah, 15% or 16%.
And what is the contribution from chains?
Chains is 25% contribution of the store.
Okay. Yeah, got it. Thank you, sir. Thank you for your detailed answer. So my next question is, what is the capacity utilization right now, and what are we looking by the end of FY25 for Sky Gold as well as our acquired entities? So what can be the monthly volumes?
We have a capacity of 750 kg per month. Last year we used 270 kgs per month. This year we have started using it 350 kg to 400 kg per month. So Sky Gold, we have 750 kg per month, and in that both entity together, we last year was 50 kg per month. So they are at utilization of 30-35%. We can go up to 200 kgs per month in that energy in the day shift, and night shift will be to 300. So Sky Gold is at about approximately 350 kg to 375 kg per month right now, and we have a capacity to go up to 750 kg. So we both together, if we both together, we can go up to 950 kg per month.
Okay. Thank you so much for your answers.
Thank you so much. Hope I have answered your questions here.
Yes. Thank you, sir.
Thank you. The next question is from the line of Vikrant Kashyap from Asian Market Securities. Please go ahead.
Good evening, sir. Thank you for your detailed clarification on acquisitions. Sir, you very clearly mentioned that there is a strong tailwinds coming from the domestic retail players who are expanding very rapidly in the next 3, 4, 5 years.
Sure.
In the context of increasing competition and gold price volatility, they have seen a sharp decrease in their margins. We are guiding that we will improve our margin going forward with the scale and increase in our say capacity utilization in domestic market. So do you see that going ahead, if these companies are opening up more and more retail stores and there is competition increasing, will it impact your margin to your clients in the
mostly I would say this large corporate we are dealing with, they need quality and different products, expensive products which are not available with normal general stores. So they are not concentrating to lower our margin or bargain to us. Other than that, they are interested to take the monopoly products or different type of products in which they can also make the margin and we can also make the margins. So we are trying to increase the margin by last quarter. We also sold different exclusive product, monopoly products, which the variety we have made, which we can cope up with the margins. So they are also introduced. So we are increasing margin with that. We have also started diamond-studded jewelry also in that margin will be created. So of course competition is there, but if your products are different, quality is good, and corporates, branded corporates need this type of manufacturer who make different products, different variety which stand alone from other normal local jeweler. So there will be a win-win situation for both margin for customers and manufacturers. So we also like to take. So we are into that. We produce more and more different and monopoly products and supply them and create a margin. So competition is everywhere there, but it's all about the product you make.
So could you name a couple of products which are unique and where you see monopoly? Any of the designs that you can quantify?
Yeah, we have Kuwaiti jewelry, which is named as Kuwaiti, Make in India, different 18 karat rose gold jewelry. We are putting a margin in that. In the 22 karat also we have made Turkish jewelry, kids jewelry, which are different from the market. Couple bands which are not available in the market. Diamond jewelry also we introduced last quarter. So all this blended, we are making the margins from there. So in this is the name of the jewelry. In this, different patterns are there. Different work is there. Very difficult work, very difficult craftsmanship. Designers we have very old and experienced designer. So this all blended creates the product.
So are these products manufactured in your Navi Mumbai facility?
Yeah, 100%.
100%. Okay. And on the second question is on exports. So you mentioned that you are willing to expand in the global market. We have seen success of Indian retailers who have tried their luck in the overseas market. With Indian diaspora, they have been successful. So
yes.
Are you targeting the same or are you targeting that open market? So you will go into US as well?
No. We are right now supplying to Dubai, Singapore, Malaysia, these all countries which have similar taste of India, but some concepts are different. So we are targeting corporates of there, like Dubai, Jewara Jewelry, and many other corporates in Singapore, Malaysia, and Dubai. Like India, we are supplying to them also, and following our Indian customer also there. Malabar Gold, Kalyan Jewelers, Joy Lucas. These are our clients. They have taking for their Dubai, Singapore, Malaysia, and their corporates also taking. We are targeting US and Europe over a medium term. Near term, where Indian diaspora. Means we have started doing the R&D for Europe and US market, where the corporates are there. Costco, Walmart, we have a source also to. But we are right now, for 2 quarters, we are planning to develop a product for US and Europe market. So for 2 quarters, we are planning to develop, then we'll enter this market. So their gross margins will be high, Europe and US, but it will take 2 quarters to develop that type of product. But Dubai, Singapore, Malaysia, already we are in the market, and we are targeting the corporate there also, who have 50 to 200 stores. We are basically in the mindset to be with corporates.
Correct, sir. Can I have follow-up on that? So, you clearly mentioned that you are targeting Europe and US market, but what we understand from market players that their taste and preferences are different from what we Indians or maybe in the Middle East have. So
Sure.
we would go for 18, 22 karat gold with lesser studded jewelry, but these people who will go for lower carat like 14, 16 karat and higher studded jewelry. And you have recently entered into the studded business. So how you are going to cope up? Do you have their manufacturing strength, bandwidth with you to manage that demand and grow ahead of the market?
Sure. So about that, I was telling that for 2 quarters we have developing the team.
Mm-hmm.
We have hired a operations head which have experience of 25 years of US and Europe markets. Recently we have hired him for this project, and we are building a team. So we will work for 2 quarters on the product. So 22 karat is never it will be saleable in US and Europe market, as you are correct. Mm-hmm. So we are working on 14 and 18 karat. 18 karat is like selling very good in India. So for this operations head we have hired a team which knows the taste of the US from 20 to 25 years. They are in the market, who knows the taste of the US and Europe market. So we are hired the team, operations head from the below team. They will work for 2 quarters on that product, and then we will launch with the products of 18 and 14 karat. So we are not in a hurry to capture the US and Europe market with a fast run, but for 2 quarters we'll read the market. We are building the team. We'll see the products, observe the market, develop the product, and then we'll launch the product. So we are in the phase of acquiring the team and building the product.
Sure, sir. I have a couple of more questions regarding your business model, but I would like to take it offline. Just one question. So all of the jewelers has given a good guidance of sub 20% odd growth for next 2-3 years.
Yeah.
Do you see that translating into our businesses? Or maybe since we are at a small base, we can grow and higher and multiply from there?
Yeah, we are a manufacturer B2B. Any corporate is going by 20% or 30%. We are with everybody. We are with Malabar Gold also, Kalyan, Sangam Jewelry, all corporates. Out of the top 20 corporates, 15 corporate are with us. So definitely, that's why we are guiding 6,500 crore revenue in 3 years. So we are with everybody, small corporates, mid corporate, and large corporate. Whichever who had 5 to 10 store is a mid corporate. Whichever who has 2 to 5 store is small corporate. So we are with everybody. So if out of 15 corporate, 1 or 2 corporates does not perform more than or does not perform, but some noise is coming. Mahendra bhai, your voice is coming. Can you call Mahendra bhai? So I will come to the point. So definitely we will grow by 30% and more, because we are with every corporate in India. We are with majorly 1 or 2 corporate in Dubai and Singapore, Malaysia. So in India, the unorganized market is shifting to the organized. So 100% this market will grow, and this retailer will grow. As you are seeing, last from 1 or 2 years, they are going very good. So we have a conversation with each and every corporate, and they are telling that in this 5 years, much of the unorganized market, which is lying 65% now also, will turn to organized market. It will be down to 35% unorganized market. So this will help us to grow, both of us, the retailer and us also.
Okay, great, sir. Thank you very much. I have a couple of questions. I will connect with you often.
You can connect anytime, sir. Anytime. Yeah.
Yes, sir. Thank you very much, sir.
Thank you. The next question is from the line of Bharat Janani from Money Control Pro. Please go ahead.
Yes, sir. Thank you for the opportunity. And
sir, sorry to interrupt, but the line for you is not very clear. It sounds like you're in the distance.
Hello. Is it better now? Hello.
No, sir, not really. There is a disturbance on the line as well. Please speak.
Okay, I'll rejoin the queue.
Okay, all right. Thank you. The next question comes from the line of Harshit Sancheti from Renaissance